the Layn Credit University. I'm going to teach you all about banking relationships and what banking relationships are. So get ready to start dating the bank people. If you want to increase your credit and you also want to increase your wealth at the same time, this strategy will definitely help you. I left a few articles below as well. I'm going to share my screen to go over them as well. One's from Investopedia and one's from Discover right below. I left the two links below. And you can actually do your own due diligence, your own research. I'm just your friend on YouTube who wants to share anything I've learned. And I also was a HUD certified counselor through a 501c3 named NACA, and I worked in close quarters with banking institutions, so I learned a lot of secrets. First and foremost, what banking relationships are, there's personal and business bankers that essentially what they do is when you become their client, let's say you open up a checking account or savings account, right? They'll want to offer you maybe insurance products, a CD, which is called certificate of deposit. Basically think of it like you're giving them money, you're putting it into an account, they hold it for say 1 year or 5 years, and you earn an interest back. That's what a CD is, certificate of deposit. It's the deposit of your money that they use. What banks typically do, and a lot of people aren't aware of this, some people are aware of this, what they essentially do is they basically use your money in their own investment or expenditures or whatever they do want to do to actually fund their maybe investments. They have a lot of different ways they can actually use your money. So think about it, when you pay a credit card off, or if you pay a car loan off, or even a mortgage, or whatever the case, oftentimes there's an interest that you're charged because you're borrowing money. Interest is basically what you're paying, is basically for renting money to you. So without you guys and gals not even knowing, and you might know this already, but if you don't, it's all right. Banks use your money, so they pay you interest. Now, a lot of people say they like the interest. Some people say they don't like the interest. It's not really up for debate, so whatever your preference is. But the point is that banks use your money and they pay you interest, and that's what the savings account savings cards for. So you put your money in their account, you save it, they pay back an interest rate because they use your money, or they have access to your money if they do need it for maybe real estate development, investment ideas, or investment areas they want to invest in, whatever the case is. The point is this: don't let the bank just use you. You have to learn the game and learn how to use the bank as well. Always do your own due diligence. I'm not perfect, but this is what I've learned. Consider this: if you open up a checking account or a savings account, that's fine, okay? What you can actually do is start actually maybe investing in products. Like if you're going to do something anyway, for example, don't do anything extra. If you're going to invest in, say, a stock invest like TD Ameritrade or something of that sort, what you should do at that point, if you're going to invest in TD Ameritrade or say Webull, or invest money into stocks or possibly even crypto, consider this: if you're going to do that anyway, I'm saying, ask your bank. Oftentimes banks have investment accounts. Sometimes they'll give it to you for free. Sometimes it might be even cheaper or the same price or maybe a little more than what you're going to invest in, because when you're a retail investor, when you invest in stocks, basically you have a stock account like TD Ameritrade. It could even be like E-Trade, for example, and you can buy your own stocks, right? So what essentially it does is you go through that account, you pay them, and basically open up an account. You can do that with your bank oftentimes. Wells Fargo, Chase, for example. A lot of these banking institutions, even check your credit unions, have investment brokerage accounts where they allow you to actually invest in stocks and buy stocks. So what that does, that puts another product on your profile, your internal profile. So when you're trying to be approved for, say, a business loan or personal loan, you appear more wealthier. That's why oftentimes people with higher net worth or people who have banking relationships with multiple products get usually favor. This isn't absolute. This is all true. I've talked to bankers, and a lot of them, some of this is unwritten. So what happens typically is that sometimes it can actually differentiate if they want to extend money to you or make it more likely if they know you, for example. If they see, hey, Conrad Layn has an auto loan with me, they have insurance with me, oftentimes a lot of banks sell insurance, they have a CD, a certificate of deposit, they have a savings account, a checking account, they have also an investment account with me, whatever the case is, renter's insurance. And now, I'm not saying you have to put all your eggs in one basket because you might become a little heavy, but spread yourself around. You don't have to put all your money there. Maybe open up a checking account. Maybe open up a savings account. Open up, if you're going to do it anyway, invest in, say, stocks, consider maybe open up a brokerage account with them. That's what you have to do. Try to figure out products that work out for you. I'm not saying to go and start spending money on anything. And again, do your own due diligence. I don't know your situation. I'm just giving my opinions and perspectives from years of experience and different things I've went through. And I found out that the more products you have, doesn't guarantee it. It can make you more likely candidate when you need that business loan or personal loan. Even if you have good credit or bad credit, seeing that you built up your banking relationships with them, you have multiple products with them, it makes you seem appear as you're more. It makes you seem like a more conservative bet. Because remember this, People with higher credit score get extended credit because they're more trustable, they're more conservative typically. There is a less of a risk that they're going to lose your money, or that you're basically a good bet. When you have a lower score, they don't really trust you, so they might decline you, they might charge you higher APR, higher interest rates. So when you have more products with them, it makes you appear like you're more trustworthy, more conservative. Get it? The more products you have, the more they trust you. You're investing in them. Plus, at the end of the day, a bank's a business. They want to make money. That's why they want to sell products to you. If you understand that and satisfy them, they could possibly satisfy you. Not guaranteed, but definitely can happen. So just want to really give you guys that kind of shout out. Also, I've talked to multiple bankers. This is not completely verifiable because it's hard to find this type of information, and every bank has its own rules. But I've talked to a few bankers where they say when they see someone has at least minimum $5,000 and $10,000, especially for some reason those figures, if you have at least $5,000, for whatever reason, they said that they can't verify that with me. They can't give me any information. So don't believe everything I'm saying. But I'm telling you, this is what I've learned from. I know a few bankers that actually work at banks, and they actually authorize loans, or they work with banking institutions. They say oftentimes what they are more inclined to actually give loan approvals to banking clients or customers that actually have multiple products or have an amount of $5,000 in their account, $10,000, and the more money they have in their account, they actually start moving the line down. Even if they have not the most perfect credit, they actually start making it more easier for them to get that loan. It's just something to consider. Don't completely believe everything I say or anything. You should always scrutinize. And again, a lot of information is all documented because a lot of banks have different rules. But that's something I learned, and I know a few bankers, and they all told me the same thing. Slight differences, so consider that. Consider putting money in your checking account, savings account, and just leaving money that you don't need. That when you get to that point, leave maybe $1,000 there. Maybe build it up, save it. It's gonna help you anyway. Might as well save it. You don't have to spend. You just you just basically park your cash there. When you start making enough money, you get to the level that you need to. That won't be a problem. You could easily put $5,000 in one account, 20 in another one, 10,000 over here, 30,000. But that's when you start building your wealth. In the beginning, it's hard to do that. You need that capital to start making money. But just an idea to kind of remember. And you should talk to your own banks. Every bank has their own rules, and bring up what Conrad just told you and see if it's true with that bank. They might tell you, they might not tell you, but it doesn't hurt having money parked away for a rainy day anyway. Might as well do it, and then consider if you're going to do something, if you're going to buy insurance anyway, see if your bank has insurance. If you're going to invest in stocks or crypto anyway, see if your bank has crypto accounts or a brokerage account that you can invest in. If you're going to do something anyway, consider stopping at your bank. People don't think of banks as insurance companies. They don't think of them, and I'm an insurance licensed agent. I've been an insurance licensed for pretty much 9 years now. So it's been quite some time. I'm also real estate licensed. People don't ever consider a bank when it comes to really insurance, or when it comes to like insurance, and they don't consider it when it comes to basically wanting to like invest, like say stocks. They think TD Ameritrade, E-Trade, Webull, which those are great platforms, right? But you can also do it there too. What I'm saying is don't spend extra money because currently until you spend. I'm saying if you're gonna do something anyway, consider speaking with your banker, or going to the bank, or call the bank, or check online, or chat with them online, and ask them, hey, I plan to get this insurance quote, or I plan to get this, I plan to invest in some stocks. You guys have a product like that. See what the prices are, see if it makes sense. They might even give it to you for free. They might give you a discount because you're already a client with them. It might cost a little more, but it might be worth it. Maybe it's not worth it. Doesn't hurt to ask people. Like, subscribe, share. Just want to give you a little 2 cents about banking relationships. Always fact check. I'm not perfect. I'm human, just like you all at home. Love you guys. I wish you guys the best. Welcome to Layn Credit University. Currently and out. Peace. About to have some fun and hang out. Peace. Thank you for following me through. So I want to share relationship banking. This is a direct article from INVESTOPEDIA. I left it in the links below as well. And I'm not going to read all of this, but I'm just going to really skim through this and show you guys. And guys and gals can definitely go through this if you have interest. But very, very important to understand that it's like dating a bank. You get different benefits, and it's pretty cool. If you date the bank and you're loyal to the bank, and they'll typically usually be a little more inclined and more loyal to you, and to possibly, not absolute, not 100%, currently it's not saying 100%, but more likely to give you some favor in regards to maybe approving a loan. Oftentimes, you can actually get a loan manually override it. Maybe you're declined at first, but then they'll manually override it. There's a lot of different benefits to actually having multiple products. And again, for the millionth time, I'm not saying to go out and start blowing money or spending on products you don't need from the bank. What I am saying is this though: if you're gonna buy renter's insurance anyway, if you're gonna buy car insurance anyway, if you're looking for a car anyway, might as well go through your banking institution. You have a relationship with them anyway, right? Ask them, see if they can give you a car loan. Can they give you renter's insurance or auto insurance? If you're looking to invest and start maybe a Webull account, which is fine, or a TD Ameritrade account or E-Trade account, or you're just looking to invest in stocks, ask them if they have maybe a brokerage account. I'm not saying to overspend or spend on products you don't need. What I am saying is that there might be a place where if you have a banking relationship already by having a credit card or a savings account or some type of checking account or savings account, etc., might as well ask them if they have any more products there. That way, on their books internally, it shows that you're a client who has, oh, this Conrad Layn has renter's insurance with us. They have car insurance. They also have a car loan with us. They also have a CD, certificate of deposit. They have a savings account. They have all these products with us. It just shows you're more loyal. And again, it's not 100%, but they can oftentimes actually use that as your leverage and tell them over the phone or in person, say, hey, look, I've been a client of yours, this X and Y Z bank, for this many years or this many months, and I have this many products with you. Is there anything you guys and gals can do? I have other friends that might actually want to come to the banking institution as well. Is there any way you can make me happy and approve this loan, or can you do this for me, etc.? When you build your credit, remember, people often think, and when I go on YouTube, people often think the only thing you have to worry about credit is just fixing your credit, repairing your credit. Not true. There's so much skill that you have to put into this, where if you really want to be approved for loans, you gotta learn the whole course, the whole 101, not just increasing your credit score, not just repairing your credit, not just making sure to pay your bill on time or keep your utilization rate at 10% or below, or at least under 30%. All that's great, but also building a banking relationship is very fundamentally what you need to do as well on a very, like I said, fundamental level. This is basic stuff that most people don't know because it's not really marketed. You hear about paying off before the month ends. You hear about making sure to keep it under a certain percentage of their credit card limit. So you hear about paying on time. You hear all this, but what you don't hear is this: banking relationships. Asking a bank, directly ask them, hey, is there a certain amount of money? This might sound crazy, but it doesn't hurt to ask. Is there a certain amount of money I can invest with you guys or save with you guys, where you guys just take me seriously as a client, or like, and see what they say. They might not answer you, they might not know themselves. But again, I met a few bankers actually, and someone is in particular, but three others, but one in particular that really went in detail, and I verified with other bankers from different banking institutions. They told me that their banking, for example, I can't say it's your bank, but their bank considers if you have at least $5,000 with them or 10,000, they actually start internally making it more likely to approve your loan, even if you have not the highest score, because it shows to them first. Remember, credit, it judges your score, and it allows the bank to know if you're responsible or not, and if you're steady or if you're conservative or not, if you're a good investment, because their goal, they are a business, they want to extend a loan to you, but they want to make sure it's paid back. So that's what a credit score. So you have a high credit score, it shows that you pay your bills on time, you're pretty responsible in their eyes. If you have a low credit score, it shows that you might not be the most responsible or not be the most money savvy, X, Y, and Z. So having income, one of the first things that they actually consider. Do you pay your bills on time? Also, banking relationships. Do you have products with us? Very important, people. And this Investopedia article goes in detail about that. Relationship banking is a strategy used by banks to strengthen customer loyalty and provide a single point of service for a range of different products and services. That means the bank offers different services. Typically, you go to these banks, and even credit unions, they offer typically insurance, they offer investment accounts, brokerage accounts. You can go through them, and this shows up as a product on your side. But always fact check and verify with your banking institution that you choose. Don't just listen to me. I don't know your situation. I don't know who you are personally. I'm just sharing what I've learned along the way, and it's up to you to do the rest of the fact checking. But this has worked for me and other people I know, so I'm just sharing the secrets with you guys that you guys probably don't know or might even know, but just making you more aware of it. And look at this: strengthen customer loyalty. It goes both ways, people. If they strengthen customer loyalty with you, it also goes back the other way when you need them. So even if you have great credit, especially if you don't have the best credit, start thinking about how you can actually purchase more products with the bank, but products you already are going to purchase anyway. I'm not saying to spend more. I keep saying it over and over again. Look at this. Understanding relationship banking. Banks that practice relationship banking take a consultative approach with customers, getting to know their particular situation and needs and adapting to changes in their financial or business lives. The relationship banking approach is easily observable in a small town bank, but it is also practiced in the retail branches of a large money center bank. Right there, people. This is very, very common in credit unions. Credit unions, we all know, typically you are a member. The difference with a credit union is usually member owned, meaning that usually like the account you start with them, you become a member of that bank, to the point where it's kind of like you're owning a share of a company, but don't quote me on that. But the point is, it's a very like oriented with development, and they get to know you on a personal basis. Usually lower fees. It's usually community based. They're not usually everywhere, credit unions at least. Bigger banks are larger scale. Typically they're more commercial based, but both offer these products, especially credit unions, but bigger banks do as well. Look at this. Key takeaways. Relationship banking is a strategy used by banks to offer a variety of different products, strengthen customer loyalty, and generate additional revenue. True, but it also works both ways. It works back your way. It also builds loyalty to them. It also makes them want to trust you more, because then it builds up your net worth, first thing. And now they're not only using your credit report. You remember, you want to give yourself the best opportunity as possible. Nothing's absolute, nothing's 100%. But if you increase the likelihood, then that just increases your chances at least. Remember, they don't know you, so they're only using your credit score and your credit history. That's it. That's so limited. If you have great credit, good for you, but it doesn't hurt if you have good credit or bad credit or no credit to start getting some additional products that you have anywhere you're planning to acquire anyway. And then now, when they look at your credit score, they also see, oh, but you have $5,000 saved here, or you have $10,000 saved here, or oh my goodness, you have a savings account, you have a checking account, oh, you have an investment account. Oh, you also have renter's insurance or auto insurance. Oh, you have a car loan with us and you're paying that on time as well. Consider this. They even offer life insurance. It's just, consider this. That's what I'm saying. That's what I have to leave you guys with. This goes on and on. I'm not going to go through more of this. I'm just going to share the other article with you directly from Discover. I left this link below too, so you can take as much time as you like. This is from Discover Credit Card Company. Look at this. How does savings account interest work? Here's your guide. This just really goes into, just going to paraphrase, and you can see here, it goes in detail, not just bank relationships. It also goes into the value of savings account. Savings account, like I said, they are assets of the bank. You're basically loaning the bank money, and them paying you interest is based on how it's the same way how we have a credit card, like say Discover card or American Express or Visa, doesn't matter what you have, credit card or loan, you pay interest typically because they're renting money to you. That's basically the fee you pay for them renting money to you. That's how it works with savings account. People don't think of it this way. When you start a savings account, you're basically renting money to the banking institution, and they pay you interest because you're loaning money to them. Look at this. While savings account sounds like a sweet deal, you may still be wondering, how does savings account interest work? Fair question. It's one that puzzles many. Let me go down here. What is interest on a savings account? At its simplest, interest is the cost of borrowing money. Simple, and that's all you need to know. Generally, you will pay interest to borrow money, right? You remember, if you borrow money, you're used to paying interest. If you have a car loan, there's an APR, it's an interest rate. If you have a car loan, and you can collect interest when you lend money as well to the bank. There you go. So I could go on and on with this. I'll just show you guys that. Thank you so much for subscribing to the channel. Thank you. Please subscribe if you haven't already. Follow me on Instagram at Conrad Layn. I love you guys. I'm going to do my best to share as much information as possible. Always scrutinize. Don't believe anyone right off the bat just because you hear someone on on YouTube, even including myself. Always fact check. Always leave all the proof and in the links below. I left both these articles. You can do your own due diligence. Don't just take my word for it. I am just human, but I'm doing my best to give you good content and deep value and deep strategy. But what I am saying is true, but always fact check me. Always fact check me and fact check anyone online. Do your best to protect yourself, because you want to make sure everything's true what the person's saying. But what I am saying is true. But anyways, like, subscribe, share, follow me on Instagram, Carl Layn out. Peace.